Okay, good day once again, traders. Welcome to today's episode of my weekly Forex Forecast. This is Onunako Tochukwu speaking for Lazarus Capitals. So, without wasting our time, let's just go right into the chart. So, as we all know, my trading strategy is very simple. I trade on the 4-hour time frame, and what I look at every day when I come to the market is simple. I want to look at the direction of the market. Once I've identified this direction of the market, if it is bullish, I want price to pull back to a support area. And if it is bearish, I want price to pull back to a resistance area. I also want to confirm this resistance area that is a 5061.8 Fibonacci area. Once price comes to this area, I wait for my market participants to come in and I join them. Also, I have a B strategy that I also use, in which when the market is in a range, I wait for it to come back to a supply or a resistance area so I can sell, or to come to a demand or support area so I can buy. These are the two things I look at each time I come to the market. These are the two strategies I use, in planning my trades when I come to the market. So let's just go right into the chart. We'll be looking as usual at the BTC USD. That is the first pair that I trade. So for the BTC USD, I told us that I'm still, even though I can see that the market has been rising from this point to the upside, I'm looking at selling the BTC USD. In these coming days, I'll be looking to sell the BTC USD because I see that the BTC USD is approaching a key resistance area, which, like I showed us some weeks ago, lined up with the weekly time frame. That is, if I look at the weekly time frame, I can see that this resistance area that I highlighted here, it's obvious to the weekly time frame traders. And like I always tell us, whenever I notice any level that is obvious to the weekly time frame or the daily time frame traders, I want to pay attention, to this level. So this is the BTC USD, and this is that resistance area, I'm telling you guys about. This is the level where this market dropped. This is the impulse leg of this move. From this point, the market dropped down to this point. This is the last low that the market broke when it came down here. It broke this low and came down here. So I'm expecting the market to come back to this resistance area and from there start to drop. We can see this drop that happened here. I'm expecting a similar thing to occur with at this other point. So yeah, I'm expecting the BTC USD to come back to this point around 40 something thousand. So in the coming days, what are we looking for the BTC USD is very simple. I want the BTC USD to pull back, to rally up here. There are some traders who have been trying to sell this market above here, who have been trying to sell from here. I want the market to come in and take them out. After the market has taken them out, if I see a weakness from the buyers and the sellers come in, I will join the sellers to take this price down. So for the BTC USD, I want to see, there are traders selling this market here. They are selling here. There are some selling here, some are selling. So some sold from here, some sold from here. I expect the market in the coming days to come in, take them out. When the market take them out and the sellers come in, I will join the sellers to ride this price down. I will not be buying the BTC USD until I see a clear break above this level. Until I see a clear break above this level, then I'll wait for the buyers to come in. Then I'll join them from here to take the BTC USD up. So I won't be selling the BTC USD until I see a clear break above this resistance area. Then I wait for a pullback, then I join the buyers. But for now, what I'll be looking at for the BTC USD is for price to rise back into this zone, take out all these early sellers here, then the sellers come in, I'll join them to ride this price back down. If I take my Fibonacci from this swing high to this swing low, I can see that this level is a 5061.8 Fibonacci area. It was a support area that will be coming to act as a resistance. From there, I expect the sellers to take this price back down. Okay. Let's move over to the next pair, which is the Euro USD. So for the Euro USD, I can see that the Euro USD is trading in a range. This is the supply area. Price left this level, came back to this demand area. We saw a build up and a push to the upside. Now, for the Euro USD, I will be waiting for the buy side for price to pull back to this support area. I can see that this support area is a good support area. If I look left, I can see that it was acting as a support here, acted as a support here, acted as a resistance. So I'm expecting price to come back to this level and use it as a support to take this price back to this supply area. Last week we saw price coming down, but I would thought that it would come back to this support, but price did not get to the support. It started going back, and that is one thing the market does to lure people into a premature trade. You can see what happened after it started going up. The sellers came back down crazy to take out to mess with people who are trying to buy this market. So that is why once the market is in this type of state, ignore it until it comes down to your level. If market have not come down to your level, just stay aside. You do nothing. So if I take my Fibonacci from this low to this high, I can see that this level lined up with my Fibonacci's 5061.8. I like to take this Fibonacci, this 5061.8, because these areas are not specific areas. It's a zone. Market might come here and come down further before started to go up. So I like to take it as a zone. I don't want to take it a specific line. So for the Euro USD, I'll be waiting for price to come down into this zone. If price pull back into this zone, from there I'll wait for the buyers to come in, then I'll take the price back to this supply area. But meanwhile, there's something else again. There is a supply area at this point also. There's a resistance area at this point also. If in the coming days price go back to this resistance area and the sellers coming from here, if I get my sell entry, I'll take this price back down to this support while waiting for the buyers to come in so that I can take it back to this supply area. So in the coming days, we'll still be looking at two scenarios for the Euro USD. We'll pull back to this support, we buy to this supply, or pull back to this resistance, then we'll sell to this support. At this point where the price is, you do nothing until you see price coming into this resistance area or into this support area. At this point, this is where you start to look for your entry. So go short from here or to go long from here. Okay, let's move to the next pair, which is the gold. So for the gold, I can say that we have a supply area here, we have a demand area here, and we have another demand area here. Let me use my rectangle for this one. Guys, the way I look at the market, if I'm looking at the market and I'm seeing supply, demand, supply, demand, if I'm seeing supply and demand, normally as a trend trader, you don't want to be seeing supply and demand. You want to be seeing only demand. It means the market is trending to the upside. Or you want to see only supply. It means the market is trending to the downside. But when you start to see supply, you see demand, you know that the market is in equilibrium, it's in a range. I repeat, as a trend trader, you don't want to be seeing supply, demand. You want to be seeing only demand. You know, okay, the market is pushing to the upside. Or only supply, you know that the market is pushing to the downside. So it makes your job easy. Once you come to the market, if it is only supply, just wait for a pullback to resistance area. Then when the sellers come back, you join them. If it is only demand, it makes your job very easy. You wait for the market to pull back to a support area, you wait for the buyers to come, and you join them. But when you are having supply, you have demand. You can see the market drop sharply from this area, came to this area, went back up again strongly, came here, came back down strongly, came here, went back up. So you can see there are buyers and there are sellers. Those type of markets, the experts will advise you to stay away from it. But we can see that because we have a lot of participants in the market now, there are a lot of traders. In most cases, the market is always in a range. So you must know how to handle this type of markets. If not, you might be staying long time without doing anything, which is ideal, because as we all know in this game, less is more. The lesser you trade, the better for you. But if you know how to handle the ranging market, it's an advantage, especially when the range is reasonable. I don't advise taking little ranges like this one. You see this one from here to here. As a 4-hour time frame trader, you don't need this type of range. The 1 minute and the 15 minutes and the 5-minute traders can get something, but for a 4-hour time frame trader, even if you want to trade a range, you need something that is reasonable. You see from here to here now, it's reasonable. Okay, so for the gold, we can see that initially price rise to this supply area, came down to this demand area. From this demand area, it went up. From there, it came down. We're thinking this demand area will hold it to take it up, but it came here and created another demand from here. From here, it went up. What I think we'll be seeing in the coming days is that the market have left this demand area. It's supposed to come back to this supply area. But as we can see, the market is bearish and is also bullish. The gold will be officially bearish when this is the daily time frame. When we see a close outside of this demand area, then wait for a pullback and take the price back down. To write it down. With the way the price is now, the gold is still bullish. The gold is still bullish until price close below this support area. But because of this supply that we are seeing here, we can still take advantage of the sell for the gold. Let's go back to the 4-hour time frame. Now, how will I be trading the gold in the coming days? Now, I'm looking at this area here to be my, the recent demand area that brought this market down here. If I want to sell the gold now, I'll be looking for a support area around this place. A resistance area around this place. Waiting for price to come, to a resistance area around there. From there, I want to sell the gold, because when the market is ranging, whereby you have, supply, you have demand, if you want to look for your entry, ensure that you are looking for your entry at a key level, just like where the market is now. If you're a 4-hour time frame trader, you don't have any business with this market at this point until it comes back to this resistance area or back to these demand areas. If the market continue to trade inside this place, you don't even attempt to go near it. The 1 minute and the 5 minute traders, they can catch some things here, but as a 4-hour time frame trader, you must understand the kind of time frame you are trading. At this point, you have no business with the market unless it rises to this resistance area or comes down to this demand area or this demand area. Now, if we take our Fibonacci from this swing high to this swing low, I can see my Fibonacci 5061.8 is here. And I can see that this level is a good resistance area. You can see this zone here is a good resistance area. It was acting as a support here. Price broke below, came back down, used it as a resistance, started coming. It was supposed to come down here. It got here, and you can see the price looking like it's going back up. So what I'll be looking at for the gold in the coming days is simple. What I'll be looking at for the gold in the coming days is simple. I want to see price rising back to this resistance area. I wait for the sellers to come in here and I join them. Or price coming to this demand area, I wait for the buyers to come in and I join them. I wait for the buyers to come in and I join them. I take the price back up. When the price gets to this demand area, if you don't get an entry here, you may look for it back at this other demand area. But if price closes below this demand area, it means officially the gold is now bearish. But as long as this demand area is holding, the gold is still bullish. Whatever set entry you are taking here is a temporal one. Until you see a close below this demand area, that is when officially you know that the gold is now bearish. So, but first of all, because of this demand area here, if the gold comes down to this demand area, we'll look for a buy entry. If we get, we'll take a price back up. Or if it pulls back to this resistance area, and the sellers coming from this resistance area will take the sell back down here. So for the gold, in the coming days, we'll be looking, at two scenarios: to sell from here, or to buy from here, or from here. Okay, let's move to the next pair, which is the Nasdaq. Okay, for the Nasdaq, as you can see, just like what I told us, if you are a trend trader, you want to see a demand and you don't want to see supply, or you want to see supply, you don't want to see demand. When the market is giving you demand and giving you supply, just like what gold is doing, I think Euro USD also is doing similar thing. When the market is giving you demand, giving you supply, it means there are strong buyers in the market and there are strong sellers in the market. So with this type of market, you need to be careful, because you might be selling, the price will just go back up, or you might be buying, the price will just come back down. That is why if you have to do anything in that type of situation, you must wait for the market to come down to a key level. It is from a key level that is obvious to the big boys, not those little ranging inside there. No, the major levels, either a major support area, or a major demand area, or a major resistance area, or a major supply area. These are the areas where you want to look for your entries. If the market did not come to those areas, ignore it. Whatever you be doing, I do that middle, just like where gold is now. Let's go back. At this point where gold is now, this place now, at this place where gold is now, for you as a 4-hour time frame trader, you don't have any business here. This is a no man's land. The 1 minute trader, the 5-minute trader, they can get something here. If they go to the 1 minute now, you expand this now, you see a lot of activities here. But for a 4-hour time frame trader, this is a no man's land. You don't have a business here. You can see people were trying to sell this market. Before you know it, the buyers coming, they are trying to buy, the sellers are also coming in. So it's just crazy. You don't need this type of headache. You stay away. Let it come to this resistance area. If you get a sell entry from here, a good one, or let it come to this demand area, because there is demand in the market, there is buyers in the market. The market should be moving in one direction. If it's moving up, you have only demand. When price pull back, after a pullback, your buyers come back, you join them. When price is moving down, you have only supply. When price rally back up at premium level, the sellers come in, you join them. It makes the job very easy. But this type is very complicated. If you can avoid this until the market breaks below and you wait to a pullback, fine, better for you. But if you must participate in this type of market that have supply, have demand, allow the market to come to key areas. Allow it. You can see this resistance area now. If you look left, you see it was acting as a support here, went up, a break below, come back there, now it's using it as a resistance. If the market come back here and the sellers come in, you join. You can see this area now, it acted as a support here, took the price from here back up, came back down, went up, use it as a support here. If the price come back to this level, you can see in the past they have used it as a support. And the market have memory. There are people who bought this market from here and they were happy when this market went up. They still have that memory that when this market comes down to this price at 4,400, they will remember that, oh, some time ago we bought this market, so we made money. The price is there now, let's buy again. Psychology. This is how people think. Human psychology. You must understand that all these things you are seeing here are activities of people. So you must be able to think, you must be able to think, how are they thinking? What are they looking at? What happened in the past in this area? So let's move back to the Nasdaq. So, so for the Nasdaq now, I can see that we have a demand area here. It is from this point that the market moved all the way to the upside. So, the Nasdaq is very simple for me. we have demand. Unlike what we have here, when we have supply, we have demand, we have supply, we have demand, we have supply, we have demand. We don't have that again. Now I can see the market trend went to the upside. I can see this area, is my line of departure. It was the demand area that shoot this price all the way back up, all the way to the upside. So what I'll be waiting is for price to pull back to a good support area, which I'm looking at this area. It was acting as a resistance here, price broke out. I will be expecting the price to pull back to this support area. From there, I look for buy. So you can see the Nasdaq now is very simple. So when I come to the market every day, if I'm looking at the Nasdaq, I'm looking at, have you pulled back to this level? Have you pulled back to this level? If the answer is no, I am not interested in whatever is happening. When it pulls back to this level, I wait for the buyers to come in. I wait for my buyers to come in, and I join them and take this price back up. That is how I trade. Very simple, no complications. Very simple, no big grammar, no stories. When I open the chart, Nasdaq, are you at this support area? Yes. Are my buyers in? Yes, I join them. Nasdaq, are you at this support area? No, I don't have business with you. I continue to wait. For to take 1 month, I continue to wait. Now, let's take our Fibonacci from this level. Take our Fibonacci from this level to this level. You can see that this area is a 50, 61.8 Fibonacci area. Guys, once I have identified my support area, or my support area if I'm looking to buy, and I take my Fibonacci and I see that this level lines up with my Fibonacci 50, 61.8, that is all for me. I just want price come to that level. I wait on my buyers, I join them. The reason I have to wait on my buyers is because I need to wait for confirmation. Because the price is at a support area is not a guarantee that the market will buy from that area. So that is why you must wait for confirmation. You cannot just come to the market and you start assuming, or you start thinking, or you start feeling that this level is a good level, you must buy. No, you must wait for confirmation. You must wait to see that the buyers coming, because you are not the one moving the market. It is the big boys that are moving the market. So if they are not interested in buying, you don't have any business buying, because if you buy, who will push the market for you? So for the Nasdaq, I'll be waiting for price to pull back to this support area. When price pull back, I wait for the buyers to come, then I take the price back to the upside. Let's move over to the next pair, which is the US oil. So for the US oil, I took the US oil trade last week. You can see the trade is still running, even though I'm looking at the US oil just like what I told us, that if the market is in a range, you'll be seeing buyers and you'll be seeing sellers. So for the US oil, I'm seeing that the market came down from this supply area. It got to this area, the buyers came in and they took this market back up. It got here and the sellers come back in strongly. Now when I'm seeing in a market, I should be seeing strong buyers. I shouldn't be seeing strong sellers, or I should be seeing strong sellers. I shouldn't be seeing strong buyers. When I'm seeing strong sellers, I'm seeing strong buyers. I'm seeing strong sellers, I'm seeing strong buyers. It means to me that the market is in a range. So now the market went all the way to this supply area. From there it came down here. From there the buyers came and took the price back up here. From there the sellers came back down. And I was looking at the market. I said, okay, this market have left this supply area, is coming back to this demand area. So whatever I'm doing at this area, I'm looking at to sell this market. So when we saw this move coming down, I was saying, okay, this market is coming down, it's supposed to come back to this demand area. But the market got here and began to turn. There's still areas there that this market have not got into, which I think is still going to come back to this area. So what I will now be looking at is how do I join the sellers if they come in. So I said, okay, I saw a gap at this level. It's okay, it's likely that this market might come to fill this gap before going back now. Okay, but first let me take my Fibonacci. I took my Fibonacci from this area to this area. So okay, if I want to sell the US oil, I would like to sell at a key resistance area, and I saw this resistance area, that this resistance area is a key one. I said, okay, I'm waiting for the US oil to pull back to this area. From this area, I want to sell the US oil. The price came to this Fibonacci area, this resistance area that is Fibonacci 50, lured in some sellers and went up and took them out. So when I saw this move, I said this market is supposed to sell from here, and I saw this gap here. So okay, probably it's coming to fill in this gap before going down. My Fibonacci is still here. So last week I saw my sellers coming at this point, so I entered from here. Now what I think will be happening in the coming days is this. I don't use the trend line, but if I see the trend line traders from here, I can see that okay, price have closed below here. There's also a resistance area here, price have closed below. So I took the trade, stop loss above here. I'm looking at price coming down here. If it goes back up to take me out, fine. So but in the coming days now, the same way you use the Fibonacci as your entry, you also should be careful if the price is going against you to a Fibonacci area. Now, for these buyers who took this market from here to here, they have a strong support area at this point. They have a strong support area at this point. Let's just make this clear. Okay, cool. So in the coming days, if the oil gets to this support area and fails to close below, and at this area the buyers come in, I will exit. You can see this area is a strong support, acting as a support here, support here, support here. There's even a gap here too. So if price gets to this support and fails to close below, and the buyers come in, I will exit my sell trade and join the buyers. But if price closes below here, I will hold my position. Maybe later we might see a pull back to this area, then the sellers will come back and this price will come back down. Probably by then I might add another position at this point. So in the coming days, this is the US oil, crazy pair with what is happening in the Middle East. Anything can happen. The market can open on Monday and we'll just see a gap up, and the market will just gap up and continue moving to the upside, or you can see a gap down and continue coming down. So, and that is why whenever you are entering the market, you must risk what you are comfortable to lose. You must risk what you are comfortable to lose. You must risk what you are comfortable to lose, so that you can sleep. Whatever happens is a game of probability. You have taken your entry, you set your stop loss. You know that this is my entry condition. This is my this is the way I trade. I know that if I do this in a long time, I will end up being profitable. because trading is a game of probability. You don't rely on one single trade to do the magic for you. No, you must be able to consistently trade your edge. It is after a long period of time, time will do the heavy lifting for you. So in the coming days, if the US oil pulls back to this support area and fails to close below and the buyers come in, I will buy the US oil from here. But if it closes below, because I'm expecting it to come back to this demand area, but if it closes below, then I will hold my position. Probably when it pulls back, I will add another position from this place to continue down. So for the US oil, I'll be looking at this area for a possibly buy entry, or this area for a possibly sell entry. So guys, let's do a recap so that we can outline our trade entry. So for the BTC USD, I'll be looking to sell the BTC USD from this point anywhere inside this range. The sellers coming, I will join them. They might get to this point or even to this point. If I see the sellers coming, I will join them. I will not buy the BTC USD unless I see a significant close above here. So I'll just be looking at, let's say, price to pull back to this area. Let's look at this area here. I think there's a pivot point here. Price to pull back to 84.84. Entry at 84.84. Stop loss can be here at 83.774. You can take your TP at 63.379. Then for the Euro USD, for the sell entry can be at this area at 1.18279. Stop loss above here 1.18542. TP here 1.16295. For the buy entry can be here at 1.16282. Stop loss below this zone at 1.15691. Then your TP can come back to this supply area at 1.120828. but holding a swing trade like this is not easy. It's not easy. So if you are not used to it, you can just exit at this point for your buy at 1.17990. But if I take the Euro USD from here, I'll be holding to this point until the trade is invalidated. You must have your invalidation criteria when you are in a trade. There are things that the market will do. You don't even need your stop loss to hit. There are things you will see, you will exit your position. Okay, so for the next one, which is good, for the sell entry will be at 47.61. Stop loss can be here at 49.10. TP at this demand area at 4400. For the buy entry can be at 4400. Stop loss can be below here at 43.44. Then you can exit at this point at 47.61. So if you do not get the buy entry here, you can get it at this point. So when price get to this point, don't be in a hurry to buy. Wait for your buyers to come in. They don't come, probably maybe they will come down here. If price closes below this demand area at this should be at 4100, officially the gold is now bearish. But anything in this place, the gold is still bullish. Whatever sell entry you are taking here is just a minor sell, not a major one. Okay, for the next pair, which is the Nasdaq is very simple. Wait for price to pull back to this support area. Entry can be at 26.241. Stop loss below this zone at 25.840, and your TP come back to this high at 27.736. So for US oil, buy entry at 97.012. Stop loss below here at 92.987. Your TP can come back at this point at 114.853. If you don't get your entry at this zone, if you don't get the buy entry at this zone, stay away. Come and look for it at this point at 76.724. So guys, thank you for staying till this end. Until I see you in my next video in the next coming week, God bless you. Thank you so much.